Have you ever wondered what happens when artificial intelligence gets it wrong in insurance? We talk a lot about how AI is transforming the industry, from underwriting and claims processing to customer service and pricing. But what if the model breaks? What if it's biased, opaque, or just plain wrong? In this video, we're diving deep into what happens when AI fails in P&C insurance, the real-world consequences, who's held accountable, and what needs to be done to avoid these failures. Let's start with a simple truth. AI isn't magic, it's math. And math is only as good as the data and logic behind it. So what does AI failure actually look like? 1. Underwriting mistakes. Imagine an insurer uses AI to evaluate small business risk. The algorithm scans applications, reviews industry classifications, zip codes, historical loss data, and then declines coverage. But it turns out the AI incorrectly flagged a bakery as a fireworks manufacturer due to a classification error in the data feed. That small business, they're now uninsurable by that carrier and don't know why. The result? Lost business, frustrated customers, and regulatory risk. 2. Biased pricing models. Another failure. Let's say a personal auto insurer uses telematics and driving behavior to price premiums, but the AI unintentionally penalizes drivers who live in urban areas with more stop-and-go traffic and higher accident exposure, even when they personally drive safely. That leads to disparate pricing by zip code and potential discrimination lawsuits. Some states have already begun limiting how certain variables like credit score and location can be used. 3. Claims denial errors. Now picture this. AI is used to triage auto claims. The customer uploads photos of their damaged bumper. The system says, low impact, under deductible. No adjuster reviews it, claim denied, but in reality, the car has internal frame damage. Weeks later, the policyholder is furious. The repair shop is confused. The insurer is backpedaling. That's a failure in image recognition and automation without oversight. 4. Chatbot gone rogue. In customer service, AI-powered chatbots are meant to simplify communication. But if they're poorly trained, they can misunderstand customer intent, give out inaccurate advice, or frustrate users with endless loops. One insurer had to roll back a chatbot rollout after it mistakenly promised coverages not included in policies, creating both a reputational nightmare and legal exposure. So what causes these AI failures? Bad data, inaccurate, outdated, or biased data skews the model. Poor training. If AI isn't trained with edge cases or diverse inputs, it will generalize incorrectly. Lack of oversight. When automation replaces human judgment entirely, mistakes slip through black box modeling. If the model's decision logic is unexplainable, it becomes hard to audit or defend. Now let's talk consequences. For insurers, AI failure means regulatory scrutiny, consumer backlash, loss of trust, legal liability, financial penalties, lost market share, and for policyholders, incorrect pricing, delays in claims, denials for no clear reason, inability to access or understand coverage. That's a huge problem in a world where AI is being embedded into nearly every part of the insurance value chain. So, what are insurers doing to reduce AI failure? Human-in-the-loop systems. Even when AI automates decisions, there are checks where human experts can intervene on outliers, exceptions, or appeals. Explainability and transparency. Insurers are building models that can be explained why the model made that decision, what data influenced it, and whether it aligns with regulations. Continuous testing and validation. Models are now stress-tested, audited, and evaluated for fairness, accuracy, and compliance. Feedback loops are built in AI governance frameworks. New roles like model risk officer and dedicated AI ethics committees are ensuring that AI use is aligned with organizational values and legal frameworks. Regulatory collaboration. Many states are requiring disclosures around AI use in pricing and underwriting. The NAIC and state DOIs are increasingly involved in model oversight. What does the future look like? AI will continue to play a huge role in property and casualty insurance, but it will need to be trustworthy, accountable, and explainable. The winners in this next phase will be the insurers who don't just use AI, but understand it, monitor it, and correct it when things go wrong. Because at the end of the day, insurance is about trust, and trust is hard to regain once it's lost. If you want to understand more about how P&C insurance is evolving and how data, automation, and AI are reshaping the future, subscribe to InsurKnowledge. We make the complex simple, and we make insurance make sense. See you in the next one.